So Pedro, take it away.
Okay, thank you very much, Eunice. Good morning, everyone, and good afternoon. So my name is Pedro Campilho. I'm from Inova Mais. We are one of the partners and the coordinators of AfriConEU project. This is a 3-year project. As you can see on this slide, we are ending next year on January. And here, the goal of this project is to create the first trans-continental network academy aimed to African and European digital innovation hubs. So, as I was saying, the idea of this project is to capacitate the digital innovation hubs in knowledge sharing, networking, collaboration, creating here joint projects between Europe and Africa, and create here synergies so that both of the sides could develop their capacities. In terms of general goals, the project aims to facilitate knowledge and experience sharing, creating beneficial partnerships, and of course, as I was saying before, create here collective projects to boost the digital innovation economy in both sides, but in particular efforts in Africa. We have a consortium of 11 partners from both continents. Of course, in Europe, we have partners from Portugal, United Kingdom, Italy, Slovenia, and Greece. And in Africa, we have Ghana and Nigeria, and Uganda and Tanzania, with the partners that you can see here presented. In terms of project phases, we had the first phase that was to analyze the current situation and state of art in the African countries that are participating in the project. In the phase 2, we developed the AfriConEU Networking Academy with 2 sub-programs, one focused on capacity building and other focusing on transnational cooperation between Africa and Europe. In terms of the phase 3, is the one that we are now undergoing, and it's basically the implementation of the academy, which this event today it's part of, and also to see what it's the impact of this academy in the countries that are participating. Phase 4 is more focused to the community engagement and networking, and the last phase, phase 5, is about communication and dissemination, and it's of course common to all of the projects. As I was saying before, so the Networking Academy has 2 big sub-programs, as you can see here, the capacity building program and the transnational cooperation flagship program. Here we have a program for a total of 46 events, and that are now going at full speed. So at this stage, we have usually at least 1 per week. And yes, of course, here the goal is to strengthen here the AfriConEU community that includes a lot of stakeholders, as you can see below. And the idea is have here a lot of local workshops, webinars, masterclasses in the terms of the capacity building, and then we have the other side of the big events that I'll talk to you about it later on this presentation. So in terms of the capacity building program, that we have all of these events. These cover a large set of thematics, including business models, technology transfer, financial to startups, and skills development. And here, for each one of these thematics, we have all of these events, webinars, local workshops, and masterclasses. And here, just a special highlight to the local workshops that are implemented by our local African partners. And here, also together with the online events, such as this one as today, this attracts a lot of audience. So we can see that this is bringing a lot of interest from the African countries. In terms of the trans-continental partnership. We also have specific thematics to these ones, including digital markets, digitalization jobs, investments and opportunities in Africa, and startups and entrepreneurship in Africa. This partnership program is having all of these big events. So the brokerage event that happened last November in Italy during 2 days. This event also had parallel events in the African countries. So with the local speakers and local activities, and this was very successful since this had more than 1 million impressions in the social media. So this was also a big event. The next events that we are going to have are 4 bootcamps in the summer of this year. And then at the end of the project, we'll have a big capitalization event. As you can see here, just a quick overview of the events that we had last year in all of these thematics, including the brokerage event there. And then for this year, for 2023, we will finish the 46 events. We are now on the number 31, so today's event that you are attending here. And of course, we still have some events until the end of the year. So of course, you are all invited to join us and to participate, because I think this is also a big opportunity to everyone to network, to learn, to share experiences. So it's also a big opportunity for all of the sites. So as I was saying, until October 2023, we still have a lot of events, both physically in the 4 African countries and both online. So regarding these events, these academy events, these are free activities. Only the registration is needed to access. So as I was saying, please just visit our website. We always have there everything included, so you are free to join. Any question, please just let know me or Eunice, of course. And thank you very much for the presentation.
Thanks, Pedro. That's given us a good overview about the project. And like we said, this is not a standalone session. It's part of the academy. I was sort of furiously typing behind the scenes because I'm wondering if we've had any issues with our link. We had 60 people sign up, which usually means we have about half of that on. So we are sort of trying to figure out and reach out to the people who signed up and make sure they have the right link and the right time. So we might have a few more people joining us as we go along, but the show must go on. And like I said, luckily we are recording this we will be able to share this with those who missed the session, and they'll be able to kind of attend it and get their certificate, even if they attend it on sort of from the recorded version. So I was just gonna take over sharing the screen. If you could stop sharing. Yeah, that's fine. 1 second. Okay. Okay, so just a quick run through the agenda for the session today. We've had the AfriConEU introduction, and then we're going to have a presentation from my friend and colleague, Alford Charumbira, who is from Utando Social Impact Solutions, who is going to give us an introduction into impact investing and subsidized finance. I did warn Alford, he's an expert in this field, but I did tell him many of us are at the start of our journey. We need to know what is this all about? How did this emerge? and then kind of talk us through. So I'm really looking forward to this as well, and to hearing that. We will have a discussion after that. My colleague Stav is online and also in that sort of impact finance, impact investment space, and we shall have a discussion, and obviously you'll have a chance to ask your questions. I won't take very long, but I wanted to quickly introduce ourselves. So we're ATBN, as Pedro mentioned. We're part of the AfriConEU project alongside 10 other organizations, both based in Africa and across Europe. As ourselves, we are based in the UK, and we are a social impact research and delivery organization with a goal of contributing and working towards inclusive digital transformation in Africa. We do this across 3 pillars of work: gender lens innovation, where we are doing specific programming and capacity building around promoting gender inclusion within the digital ecosystem within Africa. Innovation ecosystems, so looking at research and programs around how to really support the development of locally led and sustainable innovation ecosystems within Africa. And lastly, trans-continental partnerships, so being the bridge and looking at how to facilitate collaboration around innovation and technology between Europe, Africa, and the globe. These are some of the partners we've worked with, and some of the funders who've supported our work. And without further ado, I'm going to actually welcome Al Ford to give us this amazing session. Al Ford, I'll ask you to introduce yourself, because I know I won't do it justice if I do that, but I very, very much appreciate you coming in to give us your time and share your expertise in this space. So welcome, Al Ford.
Thank you, Eunice.
And I will stop sharing, sorry, so I can give you the right to do that. Sorry.
All right. Let me start sharing my screen so that. Sorry.
The power went to your head.
Impact investing is one of the areas I'm fairly good at. Technology is not. So let's see if I can figure this out. All right. Sharing. Is that fine? Can everyone? Yeah, can everyone see my slides okay and hear me okay?
Yes.
Perfect. So thank you, AfriConEU, for organizing this event. Thanks, Eunice, for the invite. I'm quite honored to be here. I think it's really fantastic to be amongst a group of people that really care about, what's happening in the world, and people that are really, enthusiastic about changing the status quo. I think it takes these sort of events and this sort of collaboration and these sort of conversations to try and keep the movement going about how we can change the world and how we can, change the status quo. And I think a big part of that is investing in the things we care about, investing in the ideas that we care about. And that is why impact investing is really one of the, I think, the pillars to ensuring that we succeed in the things that we care about, and kind of starting to have finance flowing into the ideas and into the things that we care about. So my name is Alfie. I was born in Zimbabwe. I moved to South Africa when I was young for college, and now I live between South Africa and the US. So I'm in Chicago at the moment. It's 5 a.m., but I'm really looking forward to this. So I'm happy to be here. Let's get into me sharing some of the things that I think are important with regards to impact investing and subsidized finance. I've tried to keep some of the content as simplistic and understandable as possible. There might be a couple of slides or a couple of ideas that might be foreign to some of you. And I hope that during the discussion, we can kind of touch into that and post this webinar as well. I'm happy to have conversations and explain any of the things that might not be a little bit foreign. That said, let's go ahead and get started. So a little bit about the evolution of impact investing. Now, when we talk about impact investing, the thinking is that it's something that's just started, a couple of years back, 5 years ago. But really, impact investing has been happening from the beginning of humankind, right? And I think this sort of first starting to record it and understand it, at least in the history books, was perhaps in the 17th, 18th century with the Methodists and Quakers, who really just wanted to invest in ideas that promoted some sort of religious or common belief in the communities. And I think that part of impact investing was largely influenced by negative screening, which was really based on religious principles. We had the Pioneer Fund coming in 1928, and the Pax World Fund that was associated with the Vietnam War, and people that were opposed to the Vietnam War wanted to invest in funds that did not promote the war in Vietnam. And fast forward that to the Rio Summit in 1992, when sort of the UN and some other global bodies started to get involved in the idea of impact investing and really putting money into programs and ideas that changed the status quo in the world. And then we have the Principles for Responsible Investment in 2006. That really started to kind of formalize the idea of impact investing. And really, when we talk about impact investing, we're simply just talking about investing money with the idea of generating positive, measurable social, environmental returns alongside financial returns. And we will talk a little bit more about the measurability of impact, because I think that's really becoming key in conversations around impact investing. And that's the major difference between regular venture capital and impact investing, is that idea that we can demonstrate the impact that we are having. And if we just quickly talk about the spectrum of impact, the way it sits in terms of investments in general. So I think the evolution of it has been, we have on one end traditional philanthropy, where organizations or foundations or family offices will write out a check to address some sort of societal challenge. And really all they care about is social return. So it could be someone or a group of people or a foundation that cares about gender equality, for example. And so they would just go in and say, well, you know what, we care about gender equality. We want to see some sort of social return in that, whether that's 1,000 women getting into social entrepreneurship. And then from traditional philanthropy, we kind of move on to venture philanthropy, where really venture philanthropists are looking to address social challenges, but using venture investment approaches. So although it's social return focused, there is some element of financial return that they would require. On the other end of the spectrum is purely financial returns, venture capital, moving on to sustainable and responsible investing. And that's more financial market rate focused. So in the middle is kind of your social investing and impact investing. I think the major difference there is that with social investing, we're looking at some social return, some sort of impact, and sub-market financial rate. And with actual impact investing, we're looking at social return and financial market rate. So these two can often be confused one for another. And I think in this way, we were probably looking at more in the middle of social investing and impact investing, because in my experience, I have not come across a lot of impact investors that would require social return as well as financial market rate. In fact, I would discourage us, I think, from seeking investment from firms or foundations or families that insist on financial market rate returns. I think that's a big debate in the investment space at the moment. Here we go. in terms of impact investing market size, don't worry too much about this, but really it's a lot of, I think, investment capital that's going into impact investing in some shape or form or another. As of the last count, which was December 2021, we're still waiting for 2022 numbers, but we're looking at upwards of $1 trillion. So I think that there's a lot that we could do there and tap into in terms of the available capital.
I just wanted to go back to that point you made about the financial return and market rate. Mm-hmm. Why is that? Why, in your opinion, why is it unrealistic to expect to get market returns alongside social impact?
So I don't, it's a good question, Eunice. I don't think that it's unrealistic to get financial returns as long as together with social return. I think it is not well received with social entrepreneurs and impact focused organizations, because then we face the risk of social entrepreneurs and actors in the ecosystem trying to balance financial returns and social returns. And often we find that there becomes the mission drift where they're now more focused on the financial returns, and the social returns tend to suffer.
Yeah. Social returns actually require some investment, right? And if your goal is to maximize profit, you're going to buy the cheapest inputs, you're going to focus on really saving costs, which, is not necessarily aligned with it. Is that sort of the reasoning that, it's hard to...
Well, the idea, yes, you're right. The idea of impact investing, at least in theory, is that we need to see some social change. So our priority is to see some social change, to see some impact in the community or in the world or in some space. That is the overarching idea. And the idea of ATBN and AfriConEU and social enterprises and incubation hubs and digital innovation hubs, the driving idea is that we need to see some change. The idea is that we care enough about this idea, whether that's gender inequality, whether that's climate change, that we want to see change in that. And once we start, and there is some financial return to be realized from that, but once the goal becomes we gotta get financial market returns now, then that mission that we set out to achieve tends to suffer. Over time, we could really get even higher than financial market returns. If you take Patagonia, for example, that they make outdoor wear and that sort of thing, and in essence they are a social enterprise, right? But they are more profitable than normal enterprises that are not necessarily mission social return driven. So over time, there is actually research, and we're finding that mission driven organizations tend to be more profitable in the long term than non-mission driven enterprises. But I think in the beginning phase, where we're still actively looking for investment, I think it's advisable to look at opportunities where we are allowed to have a runway in terms of when we can start to get aggressive with financial returns and focus more on that social return aspect. And this, of course, thank you for asking. And again, anyone in the audience, if they feel like raising a question, please feel free to do so as we go through this. So these are some of the areas of impact investing that we've found impact investors to aggressively invest in. African fintechs is I think a highly talked about topic at the moment. I think areas of healthcare, agriculture, and education and clean energy are also some of the areas. And the idea really is focused on people and planet. Are the ideas going to improve people's lives? Are the ideas going to improve the planet? That's really what impact investors are focused on at the moment. I think the idea of digital innovation really, really touches on almost all of these aspects, and I think that's why it's really interesting what the collaboration and ecosystem we're talking about here is doing. And in terms of the ecosystem, this is just a rundown of ideas that, we've got impact funders that are governments, family offices, pension funds, sovereign funds, and this list is not exhaustive. I think we tend to really underestimate the idea of incubation and accelerators, because that's a lot of the success we have seen in impact investing has come through incubators and accelerators and innovation hubs. And a few reasons for that. One is the startup failure rate is very high. And that's because the skills are not necessarily sharpened. They're often there, they're just not sharpened enough. And the ecosystem can be very lonely in the ecosystem. And so and access to capital as well can be a challenge. And what we find is that incubators and accelerators play a huge role in terms of helping social enterprises. What we find to be a challenge is the impact data, and I think we're going to touch a little bit more again on this idea of impact data and impact measurement, because I think that's kind of where the issues arise. Just talking about catalytic capital, and by catalytic capital, really, we're just talking about patient capital that allows you to go and, I call it, dream a little bit. And I think governments are a huge part of that. I think DFIs, foundations, and family offices are quite a huge part of that. The risk tolerance in terms of financial returns is quite high. Sorry, I'm admitting folk as well as I go. So when I'm looking at the screen, I'm admitting people, which is not a problem.
There is a question for you. Are there any intersections between impact investing and socially responsible investment? So are they different? Are they on a spectrum? What is your take on that?
Thanks, Eunice. That's a good question.
That's coming from Michael. I don't know if you.
Okay. Hi, Michael. Yeah, I can see now. Yes, I think there is an intersection definitely between socially responsible investing and impact investing. The way I think about those two is that with socially responsible investing, I think we are more looking at causing less harm to society. So with my investments, if I'm an impact investor, I'm thinking about socially responsible investing. I'm more thinking about my investments causing any harm to society or the environment. So I'm not actively seeking social returns, as it were. I'm seeking to not cause harm to society with my investments. With impact investing, I'm more actively seeking some sort of social measurable impact. That's sort of how, but really, again, because it's such a nascent subject, these things are often interchanged with one another and often interchangeably used. But that's how best I would describe it.
Hello.
Yes.
Yeah. So the reason why I asked the question is because of the spectrum, that slide you showed with the spectrum. I was thinking SRI should be under impact investing because it's one is reducing the harm and the other is promoting a positive outcome, meaning that there is already a deficit and you're trying to, pay for the debts or the deficit. So in whichever way you are creating positive outcomes, socially or environmentally or in terms of governance. And so with social responsible investing, we're often looking at the ex post, which is ESG rating, environmental, socially, and governance ratings. And so some companies actually have those objectives. So they are investing to achieve environmental, social, and governance outcomes to advance their ratings so that investors will look at them and then based on that, make impact investing. So my reason for raising that question was I was thinking it should be under impact investing, or somehow there should be, that slide should have shown that it is somewhat also impact investing. Yeah,
it's a good question, Michael, and it's a good point you raise. Yes, SRI could be considered under the big umbrella of impact investing. And you raise a good point about ESG. Now, in terms of ESG, what ESG really is about as an organization, what are environmental issues what are the environmental risks that exist? What are the social risks that exist? What are the governance risks that exist? So fundamentally, in terms of ESG ratings, organizations are not thinking about, well, I want to go out there and make a difference to society. That's not how ESG works, right? They're thinking, what are the environmental risks? What are the social risks? What are the governance risks? And how can we mitigate against those risks? And how can we take advantage of the opportunities that exist in ESG? Essentially, that is what the thinking is. And I know that there's a thinking that ESG and impact investing and SRI are the same thing, but reality is they are not. Like I said, except for example, here in the United States, ESG is regulated by the Securities Exchange Commission, right? And what they say essentially is, well, we want to see if you know what ESG risks exist, more because this can affect the value of the shareholders versus we want to see impact in the communities. And I think that's kind of where the real difference is between ESG and the ratings and impact investing is. Does that make a little bit of sense?
Yeah, I understand. I just wanted to do this discussion for the benefit of others. Because that's my research. That's actually my research. So I'm quite versed in this area.
Yeah. Like I can jump in on that. Is that okay?
No, it's okay. Then I was asking, one question is, are impact investments often state-led? I asked that follow-up question because I'm asking because of the whole idea of the subsidized finance.
Marco, ask again. Sorry, I didn't get the question. What was the other question?
Yeah, so I'm asking whether are they often state-led, impact investing?
State is in government-led.
Yeah.
Not in my experience, no. Not in my experience, no. It's and that's I think a bit of a difference between ESG and impact investing, right? Because ESG is often regulated. It's a regulatory requirement. Impact investing is not necessarily government-led. Not in my experience, no. I found that that's more led by, if you look at that slide about the spectrum, it's often philanthropists and venture capitalists that are saying, or we also care about some of issue A, B, and C, whether that's gender equality, whether that's food security, whether that's healthcare. So they say, well, we care more about that, and we want to use our money for that. So it's not necessarily state-led, no. And that's probably one of the differences between ESG and impact investing.
Stab, you had a comment, and then I think we probably should move on so that we get to the end of this presentation. Stab, your comment, go ahead.
Actually, so two things. One,
thank you.
I think it will complement what
Michael
said in the chat right now, that the way that I think maybe it's simpler to digest is that ESG helps us mitigate our harms by either not investing in things that are directly harming either the planet or communities, or trying to kind of invest in things that are, let's say, less damaging. While impact investing, we are already trying to contribute to solution or to benefit some stakeholders. So we are much more active. So impact investment is a tool that allows us to use our money to not only to mitigate, but to advance solutions for challenges. So that's on that. And then on the questions of is it government-led, my experience shows that it depends where you're seated. So in the US, and I think that's also true, I'm based in Israel, it's definitely more private sector led. That will be businesses or let's say philanthropy. But in Europe, for example, we see impact investment kind of being supplemented by government. So, for example, in the UK, there is big societal capital. So it's being led by the country, by the state. You see a lot of EU funding going into impact investment. So I think as it's evolving field, there's different ideologies and motivation that also kind of it depends where you are. Kind of globally and and even politically, what is kind of the driving force of the economy and the finance? Is it more government led or is it more private sector led? So that was my 2 comments on the discussions as we just had.
Yeah, and thank you, Kiko, as well for that contribution. I see you are sort of echoing what Stav was saying. So go ahead, Alfred.
Thank you very much. Yeah. I think it's very useful. I'm going to run through some of this. And Eunice, I hope you can also share the presentation, and I'm sure everyone will have access to it, just because I don't think we have enough time to go through it all. But again, if there's any question, jump in. We can chat about it a little bit more. And this is just my thought of what effective impact investing, what could drive effective impact investing. Like I was saying earlier, I think that innovation hubs are a big part of that. I think startup accelerators are also, I think, a big part of that. I think social enterprises, of course. I think partnership with academic institutions and developmental institutions like the EU, for example. I think that's a big part of what's driving impact investing, at least in my experience. And I think I'm gonna speak a little bit about innovation hubs and why that's really key. And one of my favorite ones is Los Angeles Clean Tech Incubation Hub. Look it up online and see some of the really great stuff that they're doing, and raising quite a few millions of dollars. And one of the directors is a good friend of mine. But really what's driving, I think, the idea of investing through innovation hubs is, one, the size of checks that impact investors are willing to write. Now you'd find that if I'm an impact investment firm sitting in the US, let's say I'm Acumen America, for example, and I'm trying to invest in Africa, in Nigeria or Uganda or Tanzania, oftentimes some of the startups perhaps only require $100,000, but we can only write a check for $1 million because we don't have the means to sort of keep an eye on a $100,000 check. And so innovation hubs come in and sort of take that check and distribute amongst the startups because they are more on the ground and understand better the needs of and can track better the startups that they are working with. We touched on a startup failure rate. I think innovation hubs massively increase the chances of success in that regard. I think innovation hubs, because they're often local, they also understand the political and social risks, the risks associated with that environment. I think one of the things that are important with regards to impact investing is having a clear focus area, whether you're investing using thematic lenses or best-in-class lenses in different sort of ways of approaching this. And that speaks again to Michael's point about SRI. I think that's one way one could focus on as part of the impact investing and overall umbrella. I think having clear impact goals is important, and that's really tied to SDGs. I think understanding of risk is also key. Again, I think measuring that impact and saying this is the impact that we're having and tracking that impact and is really, really key for impact investing purposes. And I think a lot of people have been caught up in greenwashing with regards to this, because either we overstate the impact or we understate the impact, and it's quite a delicate dance in terms of getting that right. I think communicating that impact is important. Impact multiple of money is quite a useful tool in terms of demonstrating social and financial returns, and I would encourage everyone to kind of look that up, and you might find that useful. And again, I'm happy to chat about that if we have time and how that looks like. Now, so I'm going to talk a little bit about impact finance. I'm sorry if I'm rushing through this. It's just
Are you supposed to be sharing your slides, because we can't see them, by the way.
Oh, oops. Sorry, guys. I'm thinking I'm sharing this whole time. Oh. Yeah, it's saying... For me, okay, guys, can you see this now?
Yes.
Okay, I'm sorry. So the one, I think this one you guys saw, right?
This was where you were talking about the role of accelerators and incubators. So I think
yes, and collaborating with other players in the ecosystem. This is when I was talking about the importance of innovation hubs and why I found, at least in my experience, that it's important to go through innovation hubs especially when you're investing in a region that you're not familiar with, and that's often the case. You find that you have impact investment firms that are the capital is situated in or originates from the US, for example, but the recipients of that capital are perhaps situated in Africa or Asia or Latin America, and so you find that working through innovation hubs. And really, a lot of the impact investment firms that exist, at least that I know of, are actively trying to work with innovation hubs. This is where I was talking about some of the things to think about, whether we are an innovation hub, whether we are whatever ecosystem player we are, whether we are social enterprise, to kind of start thinking about these things as we navigate the impact investing space. Now, so I'll talk a little bit about impact finance and now that might look like in some of the sources of that, because I think that might be useful for some of our listeners. This slide is heavy. I was going to put it in the appendix, and I thought, let me just put it here just to highlight the idea of blended finance, shared due diligence, and bundling. When you share this presentation, just go through it. Our listeners can just go through it, and they might find some of this useful or not, but I don't think we're going to spend too much time talking about it, but it's just some of the things to think about in terms of impact investing.
Sorry, before you move on, in the previous slide, you introduced a new term, blended finance. Could we, because again, with this, there's so much language, ESG, SRI, impact investing, and we have blended finance. So just, I guess, maybe just helping us situate where it falls in this discussion, because it's a term I hear a lot. So I'm
yeah. So within the impact investing space, there are different ways of building that finance bucket. So think of it as trying to fill a bucket with finance, with money, and how you fill that bucket could vary. Where those resources come from could vary. And blended finance is really, it's a finance model that says, all right, I'm gonna get some sort of concessionary loans or grants that I don't have to pay any financial return on. And that's probably your first core in terms of capital raising, in terms of fundraising, right? you probably want to get as much concessionary loans and grants as you can get. And that's usually provided by the public sector. So, you know, we could go and buy some social bonds, for example. I think it's very common in the EU to, we buy some sort of social bonds, and the next slide will touch a little bit more on that. So we buy some social bonds, and that's so private investment, but in the public sector, and say, well, this is specifically intended for, let's say, healthcare or agriculture or infrastructure development. And that's often with limited to no, let's say, low financial return requirement. I think at the moment, at least in the US, I don't know about the EU, but in the US, we're looking at 2% market return compared to maybe market returns of 7 or 8% that are required. I think you might find this. There's a slide that you might find. I will find a slide that speaks more about blended finance that you might find useful as well. But if there's any comment about it, please feel free to chip in as well.
Yeah, thank you. That just kind of gave me, a bit more context to understand how it fits in the discussion.
Okay. It's really getting private capital towards let's say projects that otherwise private capital wouldn't flow to. It's usually early stage companies or countries that are considered high risk, or for whatever reason, could be sector or geography. These are just some of the ways that capital flows from the owners of capital to the various impact investing projects. We've got SDG retail bonds and charity bonds and green and sustainability and social bonds and listed impact funds. I think that's also quite popular in the EU at the moment. Again, this is just another way that capital flows from owners of capital to different impact themes. Like I said, these are kind of content heavy, but hopefully when you read them later on, you can kind of see where to go in terms of capital raising. Again, there's revenue-based loans and venture debt and patient capital. And I'll speak a little bit more about that in terms of, depending on what stage a venture is, where it might be more useful to go for raising impact finance. And this is exactly what I was talking about, just in terms of probably when you're early stage, whether that's an innovation hub or a social enterprise, probably grants and catalytic funds are maybe the best way to go, because again, the requirement for social return is higher than the requirement for impact for market rate returns, and so that might. Right. Go back here. I'm admitting people, and then so when I click on that meet, then I get sometimes it messes.
Yeah, I can admit them as well. So don't.
Oh, thank you.
Yes, I've been thinking, but there's a bit of a delay. Even when I click, it takes a while. So. Oh,
okay. Thank you. And so as I was saying, I think when you're early stage, you're probably looking at grants and catalytic funds because of the risk tolerance that those have. You're probably wanting to partner with academic institutions and seek for that patient capital. I think when you're in growth phase, probably impact investors and DFIs and maybe venture philanthropy is probably the way to go. I think at late stage, you probably have already raised a lot of capital from this. And if you still required more, you're probably looking at revenue-based loans and venture debt and again, probably impact investors. So I think of it as trying to, fill a cup with water. as we try to at least seek those impact investments. And I think those come in different shapes or forms. And I think I would suggest that the first call probably should be zero financial return requirement, and there are funds that are available for that. I think if you can fill up your glass of water with as much zero financial return requirement as possible, and then go to those low cost funds, and then perhaps progress from there. What I often hear in the industry is that it's not a problem of whether the funds are available or not. I think impact investment funds are available. I think it's how that capital is deployed in accessing the projects, the viable projects that can be invested in. That's what I find to be the bigger challenge. And so I think that some of the important things, I think, is just having a clarity of the idea, and I find that the theory of change really helps with that. I think just thinking about, okay, what specific issues are we tackling? What is the change we want to see? I think ecosystem partnerships are really a great value add, which is why I think partnerships like this between AfriConEU and ATBN are important. I think that we shouldn't limit ourselves in terms of where the capital flows from. I think it's best to scout the globe for mission and value-driven, value-aligned funding partners. I quite like Acumen America more because I know them personally. I know some of the folk personally, but also I know that they're really invested in social change compared to some other impact investors that might be saying on paper that they are impact investors, but in reality, they are really just looking for financial returns. Yeah, and I think, I know it's quite a lot of information, but hopefully it kind of highlights some of, at least gets the discussion going, I hope. And with that, thank you very much.
Thank you. That was amazing that you managed to get through all of that.
Thank you.
Do we have questions? I know we had a discussion going about the blended finance. So there's a contribution from Kiko and Michael as well. I think it was you, Michael, that did you want to add to that, or did you have any other question based on the rest of the presentation?
No, I think I just wanted to make those contributions which I've typed out there. So yeah, maybe that could stimulate further discussion.
Okay. Yeah. So I guess moving on to the discussion bit, and if of course, if you have any questions, or again, feel free to go back, and if there's any term that you saw that you need clarification on, but I wanted to hand over the floor to Stav now. Stav, just to add on your own thoughts or comments or areas that needed, you can add any clarity on, but then also to kind of probe, particularly given our audience of a digital innovation hub, but also entrepreneurs, just have that discussion, and kind of probe out forward a bit more on what are the areas we can kind of highlight more specifically for this audience. And I know we already have a question from Kiko, but over to you, Stav, to moderate the rest of the discussion.
Thank you, Eunice. I will be very happy to add my kind of this bits and pieces, but maybe first hand it to Kiko to kind of with your comment and question.
Yeah, thank you so much, Stav. So I just wanted to make an addition with respect to our innovation hub, like the role they play also in impact investing, especially when it comes to minimizing the cost of starting these startup ventures, like especially when they provide shared resources. So that way it becomes more efficient. Instead of all these startups having like maybe their own offices and all other services that they could share, with shared resources and services, it reduces the cost actually of starting these startups, especially when they are in the initial stage.
Sorry, my line was cut up for the last bit of your sentence, but I don't know if anyone wants to respond to that.
I would like to respond, and it's actually a question to both you and Alford, which is that recognized, that role? Because, you know, that role that digital innovation hubs can be, you know, Kiko was saying they're more efficient. Startups don't have to all have these resources, they can be shared. Alford, you mentioned around there's investors who can only cut big checks, and so the innovation hubs can help to distribute that. From your experience working in the impact investment space, are you seeing that recognition and the role of hubs, the impact investors sort of working through hubs more?
So I think from our kind of research, both in ATBN and the AfriConEU, we do see that investors are starting to kind of see, and I think we touched upon it in the presentation as well, that there is a need to work with intermediaries, and there is a need to work with people who understand kind of the both the entrepreneurial spirits and kind of the needs on ground. But to be very honest, I still don't think that there is enough of kind of let's say, both creativity and diversity within kind of the financial tools that are able to effectively work with organizations such as hubs. And so, and kind of to add on that, I think one of the things that we see is that if impact investors are kind of coming from more developed markets towards the kind of technology ecosystem within Africa and are expecting to have the same process and to achieve the same return, and are not kind of able to adjust, then I have to say, I think it kind of hinders the capacity of impact investment to really achieve impact. So kind of going back to your questions, I think what we're kind of advocate for is for impact investors to kind of being able to leverage different kind of financial kind of methodologies and assets to not only directly invest into startups, but again, work with hubs, kind of take bigger risk, deploy catalytic capital as was mentioned, to be able to kind of secure that we're not only kind of seeing products and services being developed in like kind of a year, 2 or 5 years, but we're seeing ecosystem being developed for the next 10 or 15 years. So that would be kind of my take on that.
Yeah, I want to come in with that. So I realized that most cases with early market products and services, there's often the need for public funds, either coming from government or from philanthropic institutions, because for the private sector, it's almost daunting for them to only have impact with, to discount completely financial returns in their investment objectives. And that is one way to discourage them from participating in early market investments. But hitherto, there is hope for a lot to plug into the philanthropic funds, because there's a lot of there's that projection that it's going to be a lot of inheritance or generational shift of resources, about 41 billion or so, and about 6 billion of it is going to go into, a trillion of it is going to go into impact investment, because the new generation, Gen Zs and millennials, are very interested in impact investment. So hopefully philanthropic funds are going to make up for some of the shortcomings of finding funds for early market investments, which is lacking at the moment for hubs, accelerators, and incubators, because at the moment, lots of it are either funded by government or supplemented by philanthropic investments.
Michael, your comment kind of made me think on another angle. So when we talk about impact investment, so many times we talk about very quantifiable assets, money, and even impact that needs to be measured. But when we're talking about developing ecosystems and we're talking about the roles in hubs, I think we also need to talk about less tangible things such as trust. And I think many times when we try to connect different actors, to work together. There is that lack of this need to kind of trust and know who are the actors that knows what's happening on the ground. So kind of, and it would be great to hear from different perspectives of people attending here. But I would kind of urge impact investors to try and build more in-depth relationships with hubs and hubs leaders in order to build that trust that is also needed when not only developing an ecosystem, but in kind of doing deals and due diligence and kind of invest resources in that as well. So I don't know if kind of we have hubs leaders here kind of that can share maybe their experience with working with impact investors and how that relationship evolved.
Do you have any hub leaders in the house? But as we kind of wait for any contributions to come in, just adding to that point, when we make the point of impact investors can work through hubs, and that can make deeper impact because hubs are closer to the problems and the entrepreneurs building the solutions. And I think the issue you raise around trust is really critical, because without that trust, what ends up happening is that the power structure is maintained. So even if the impact investor writing the 1 million check writes it to a hub and says distribute, if it's done in a way that is just, this is what I'm looking for, you're kind of just following what the funder says. So without the impact investor trusting the hub to say, the local market, what solutions are going to be promising, what ends up happening is the hubs just end up being an extension or just a distribution point. If that's, there is a way where that model could still be in place, but not effective, because hubs don't actually have the freedom and the trust to actually make those calls and make those contributions. So you're absolutely right. It's going beyond even just having the money flows happening or the relationship, the partnership happening. It needs to be based on trust for that to actually have the deep impact that we want to see. I don't know if you want to add anything to that, Alfred.
Yeah, no, I mean, it's all interesting thoughts as I was listening, thinking of some practical example that we recently went through, and very quickly, but it's a Dubai sovereign fund, based sovereign fund we were working with, and the CEO's idea was that I'm only going to invest in directly in startups, and we were really advocating for investing through innovation hubs and startup accelerators. And so what ended up happening is they made a decision to invest in 3 startups. And some of the startups that had applied for funding went into different accelerators, and one of them got funding from elsewhere. And towards the end of last year, that one startup raised $30 million. And so our argument was, hang on a minute, if you had invested $2 million into this accelerator, you have 10 startups, 7 of them will fail. Hopefully they don't, but if they fail, okay, but 3 of them that will succeed will make you the returns. So it just makes sense to go the innovation hub route. I think the fear that I find is the unknown, right? Like, I don't know enough about, and that's where I think the issue of trust comes in. I don't know enough about this innovation hub. I don't know enough about what's going on. And that fear, I think, is kind of holding back a little bit. I think the impact investors from going that route. And they say, well, I don't know what startups this innovation hub is investing in. And I think that's why the idea of capturing data, measuring it, and making sure you have that upfront as an innovation hub or accelerator, so that when you're having conversations with the impact investors, you have this data, you have this information, and you can communicate it.
Yeah, absolutely. We have a comment from Gideon. Gideon, you have your hand up? And you also put one in the chat, but maybe you could unmute and share that.
Well, hello, good morning from Ghana. So concerning the issue of trust, I think is very important, like it's been said, and it's from both sides. the innovation hubs and then the startups, because there have been situations where the innovation hubs have also received some funding and are supposed to give it to startups that need them. And then this has not gone well because probably the hub leaders will give it to their favorites, not necessarily those who really qualify to get the job done. Also with the understanding that probably the investor is very aware that, like it was said, out of 10, only 3 of them might flourish. We wish that all 10 will work, but it doesn't usually happen. And so they take advantage of that and then misuse the funds that are given them. And then, of course, this would definitely discourage impact investors from entering into that space. And I think that as hub leaders, ecosystem leaders, this is something that we need to do intentionally to build on that trust so that we become the conduit that they can comfortably say that, okay, I want to invest. I'm not in Ghana, so I can't get to the grassroots and then be able to validate about 10 or 20 startups that I can invest in, but there is a local hub that knows them, and so I can go through them. And I think that also brings into sharp focus what projects like the AfriConEU is doing, building the capacity of these hubs. Because sometimes it's not like they also do it intentionally, just that they don't have the capacity to do what's expected of them. So all these things come into sharp focus.
Yeah, you really, sort of hit the nail on the head there, Gideon, because I think that's also, from our research, what we found is that there is a need, typically the innovation hubs do not have that expertise around actually sourcing and investing in startups. First of all, like you said, it might be based on other criteria which are not necessarily aligned with the goal of the money they're getting. But it also raises a key point, which I think was something we raised in our research staff, which was startup hubs need to have skin in the game, right? So they need to be able to participate in the what's the word I'm looking for? The success of the investment, but also maybe also in the risk, right? And you start by, as you build the relationship, you're not going to be given like the whole $1 million check right away. Maybe it is, first of all, invest this, $50K in a number of startups. Let's support them to get to the next level, and then and let's go on with that. But I think data is going to be key. Trust is going to be key. Having the expertise around how do you source, invest, support startups around that. And I think that last piece of skin in the game, so that, they are incentivized to actually make sure that they're choosing companies that are going to, bring the desired outcome from that partnership. And we have Lynette as well, who has a contribution. We also, I don't want to forget, there's a few people that had something to add. I think there's one I missed. The challenge, Madhawa, I don't know if you want to speak up, but he commented the challenge is approaching or attract impact investment for smaller growing projects. Whatever the impact, all are interested in big projects. I think I think we've kind of touched on that a bit, but again, feel free to jump in if you want to jump on that. So I'm trying to keep an eye on the chat as well, because there's a lot of coming in, but I don't know, Alford and staff, do you have anything to add on that trust hubs piece before we maybe move on to some of the other comments and questions?
Well, one of the things that I think needs to happen, not only on, let's say, like a discourse level in evolved trust, I think we also need to think, one of the things that we recognize in our research is that currently hubs are able to attract philanthropy money and kind of distribute that to program, usually upskillings or gender and so on. But as you said, we hubs are not investors within from themselves, like they don't have skin in the game. And one of the things that I think, and maybe there are examples for that, and we didn't find them yet, but I think one of the interesting developments could be for impact investors to establish funds with hubs and kind of enable hubs to become local impact investors within themselves. So I didn't see any examples for that, but I think this is actually the way forward. It will mean that there's a lot of upskilling need to happen, especially on the financial side for hubs themselves, less on an impact side, because many of those like impact metrics needs a hub needs to report to funders anyway. But I think that's a very innovative kind of methods going forward. Again, that will require not only trust, but kind of deep collaborations between hubs and impact funders.
Yeah, I think you make a very good point. What I found as well, I think, is that the issue of legitimacy comes into play, right? You know, how legitimate is the incubation hub, and that legitimacy often comes from the collaborations the innovation hub has with the actors in the local ecosystem. Right? That sort of buys it legitimacy. A lot of impact investors now, and we are actively, you know, investing as well in the ecosystem. There's not enough deals right now. That is a big problem. Everyone I talk to in the impact investing space is looking for deals to invest in. But we're looking at directly investing in startups. We're not, the idea of investing through innovation hubs has not, there's movement in that the pin hasn't dropped quite yet. And that's where I think that innovation hubs have a responsibility here to also go out there and say, hang on, we have a solution for some of these problems. We have a solution for this. We are on the ground, we understand this, and we have the solution. I think if innovation hubs become a little bit more organized in the ecosystem, speak with one voice and go there and become a little bit more aggressive with that messaging, I think that status quo will change. Because the need is there, the need is there, the funding is there. It's the trust issue, it's the legitimacy issue. It's going out there and putting that message across.
There is one question which I think is interesting from Gabriel. Was that you speaking up? And I hope I am understanding the question, because you're saying, are we saying, is it going to become too many jobs for hubs? Are we adding too many roles for hubs? Is this your question? Am I capturing that right? Gabriel, are you there?
Please.
Are you able to clarify that?
Yes, please.
So yeah, so it's a legitimate question. How many hubs are doing so many things? Now we're also saying you're supposed to be managing investment, you're supporting doing upskilling and business development. Maybe we should ask Gideon to respond. Are we putting too much on hubs? Gideon, are you still there?
In the meantime, let me jump in. I think it's a great question. In our research on hubs, we identified 6 different roles that hubs are currently taking, including policy and skilling and connecting to finance and more. And kind of our argument was that in other ecosystems, we see those roles being kind of divided between different actors. And then in the African context, we see hubs taking all of them. And our point to that was, well, I mean, yes, maybe we need to see more actors coming in. I mean, specialized universities and advocacy group and think tanks and so on. But in the meantime, if hubs are taking kind of the different roles of ecosystem development, somebody needs to fund that. So I don't know if it's their role or not their role in the long term, but the fact is that, again, we recognize 6 different roles. And if hubs should be effective in what they're doing, we need to see more kind of tradition, philanthropy, maybe even development, maybe even public and government money, acknowledge that the hubs are doing all of that work. And to enable them to do that effectively, they definitely need more money. Having said that, the advantage of making hubs impact investors or channel for impact investors is that it's also a revenue stream, right? So if they're making successful equity investment, they are able to also get some kind of funding for themselves. So yeah, that was my 2 points on that.
Yeah, and I saw you are avoiding bringing in another term there because we're talking impact investment, but now you are going into catalytic capital area, but I think that's a webinar for a whole other day. There's a question that's been here. I've kind of held it off a little bit because I wanted to, kind of come full circle on the hubs discussion first, but a question for you, Stav and Alford. What are the biggest challenges in impact investing per geographies that you have identified? So I guess maybe for the context of this call, we can maybe talk about, say, EU, Africa, maybe Alford, you can give perspective from the US. But just very briefly, what do you see as the biggest challenges in impact investing and maybe some, across the different geographies you've worked?
Staff, do you want to go first or should I?
No, you should. I think I talked enough in the last 2 minutes.
No. It's a great question. Thanks for asking that. I think it depends on which perspective, right? If you're looking at it from the impact investor's perspective, the difficult challenge is finding the deals. That's what we find from the impact investor perspective. There's just not enough deal flow coming out of Africa, for example, or in the US, or I imagine even in the EU, there's just not enough deals coming through. So we're sitting with capital, list of impact investors are sitting with capital that they're struggling to deploy. On the flip side, at least in my experience anyway, access to capital is a challenge, right? I mean, if, when I'm in Africa, when I'm in South America, the conversation is there's not enough access to capital. So these are fundamentally the challenges. Now, bridging that gap is again where I think that idea of innovation hubs just makes sense. So it creates that bridge between capital and investing companies. And the big challenge with that is entrepreneurs in some parts of the world and even in the US are not capturing both their social and financial returns from day one. So we're waiting 3 years to start thinking about, now I need to raise capital. Now let's start thinking about what sort of impact have I had? How do my financial returns look like? And oftentimes you have a lot of impact you haven't captured. You have a lot of returns that you haven't captured. So I think that if we start capturing that from day one, start documenting that and start communicating that, I think we will bridge that gap between the perceived lack of capital on one end and the perceived lack of deals on the other.
Yeah, and I love that you say that because I think even the discussion we've been having around working through intermediaries is really around what are the solutions, some of the solutions, that approaches that could help to tackle that. So we probably need to start winding up. We have 5 more minutes, but there was a discussion here that between Michael and
can I chip in this?
Yes,
can I say something? Okay.
Yeah.
You know what? One thing I realized is apart from the issue of trust, we also talked about the issue of capacity. And one thing we should also remind ourselves is that in the African landscape, this idea is very new to us, and I believe in most developing countries as well. So the people with means, even within the African landscape, do not have a good understanding of what impact investing is all about. And as a private investor, you want to invest in things that you understand because you are expecting a return, so it will take time for them to get it. So initially there's a need to, build that sort of awareness also. It's something we haven't touched on. And I think as we want people to invest, we should also help them to understand what impact investing is all about. The use of intermediaries should be done also being mindful of the fact that it can reinforce transparency and accountability. So I don't think, only the hubs, channeling every resource expertise, technical expertise, everything through the hubs, training and capacity build, everything through hubs, finance through hubs might be a good idea. It might be good to, sort of distribute responsibilities a little bit. Mind you, we also are looking at mainstreaming impact investment. It has to be mainstream at the point. So it's important to probably think of, integrating it within the traditional finance system. And that could start with having national development banks sort of, taking a very important role in the whole business of impact investing. And that could be the beginning of that kind of trajectory where impact investing is mainstreamed, because people can go there and assess funds. Early market businesses are profiled that are considered ready to go for funding would also be assessed by an independent institutional organization apart from the hubs. I think things like that is going to promote transparency and accountability on issues of governance will be improved.
Thank you for that comment. I know, Gabriel, you had your hand up at some point. I don't know if your point has been addressed. Was that from an earlier point, or do you have another point to add? Is he? Gabriel is still there? Okay, he says that he's okay now. Are there any other comments? Do you have any last final words to close off the discussion? Staff, Alford?
Yeah, I would like to connect to the challenge point and kind of a previous point that was raised in the chat in regards of the need to fund smaller projects. And I mean, I don't want to end on a pessimistic note, but when we talk about challenges, my personal views is that impact investment, the promise of impact investment hasn't been fulfilled yet. I mean, the essence of impact investment in the end is to kind of channel more finance towards the SDGs and kind of bring more money towards goals, projects, services, products that wouldn't have gotten that finance in kind of other more traditional financial tools. Now, if impact investors will finance only big projects or projects that are the risks are big, but the returns are big, or go kind of to the safe bets, then what do we need impact investment for? So my kind of call, and I think just going to compare between, let's say, Europe and the African market, many times what we see in Europe is that impact investment kind of is channeled towards SMEs or kind of community project or more kind of remote areas of the economy. And kind of my feeling within the African market is that in order to move the needle, as we say, we need impact investors that are willing to take much more risk, that are willing to kind of compromise with returns, that are willing to invest money not only in product and services, but in market developments. And I think it will be very interesting in the next 10, and as we said, to find local partners to work with. And the interesting thing is to see in the next 10, 15, 20 years, did impact investment make a difference and was able to kind of contribute to sustainable development and growth? And kind of from my perspective, it's still a question mark.
All right, Alford, any final thoughts? What?
It's really just been interesting to listen to, the comments and questions that it's really been great. I think one of the things that I often think about is how does impact investing look like in the next 5 to 10 years? And how do we position ourselves for that? And I have no answer to that, but I think that's I think what we probably should be thinking about a lot more and starting to position ourselves. And what I think it might look like is that, like Stav was saying earlier on, and I think a couple of people have raised the point, is that eventually impact investors are going to sit with capital that they cannot deploy. It's already happening as we speak, whether because they don't want to write a small check or because they are not familiar with other markets or they don't have capacity to go into those markets. but we're already starting to see that trend. And so again, I think that it's up to us, particularly speaking about in the African context and saying, let's go out there and have these conversations. There's no limit to what we can do. Let's have conversations in the European Union. Let's have these conversations in the American market. Let's have these conversations in the Asian market, in the Middle East market. Let's bring to attention the opportunities that exist in Africa for impact investors to tap into.
Amazing. Thank you so much, Alford. We really appreciate you waking up very, very early for you to come and share your knowledge with us and to be a part of the discussion. From me, ATBN team, and also the whole AfriConEU community, huge thanks, and just join me in showing our appreciation for Alford. Before I let you go, I have a request from you. So like you will have heard, AfriConEU events, this is completely free for you to attend, and you can always go online and catch up on any of the ones you've missed. The one thing we do ask from you is feedback. This is very important for us to know that these sessions are useful, that you're learning from them. And when you fill out, I'm going to give you a survey link to fill out. Please do take 5 minutes of your time today to fill that out for us. And when you do fill out your form, you will actually receive a certificate of attendance to kind of show our appreciation and just to show that you have participated in this session. So that is the link for our evaluation form today. Alford, you'll get a separate one in your link. I think I'm forgotten one thing around our family photos. So just excuse me while I need to stop sharing. And just anyone who can turn their cameras on, we're going to take a quick photo before I then go back to sharing the evaluation link with you. Good to see some faces, Filipina, nice to see you. Good to see some familiar faces. Michael, great to put a face to all the comments and input. Thank you so much. Constantinos, are you going to do this for us?
Definitely. Only if we provide a very good smile. So I would ask everyone to smile. 3, 2, 1, big smile. All right, got it. Thank you very much.
Fantastic. I am putting the link to the survey in the chat, and I will also share my screen again. I'll also put some background music to accompany us as we spend the 5 minutes. This is our tradition. We kind of have a little African jazz party at the end of this as we fill out our evaluation forms. Alford, I'll just look up yours just now and send that to you.
Yeah, no problem.
So yeah, I hope everyone, please try and access the link and let me know if you have any issues with that. The link is also in the chat. So I just need to stop sharing so I can get the music on. Ford, I've just sent you the one for yours for the speaker one.
Yeah, no problem.
Let me find our playlist.
Yeah, I was just about to ask, is the
I need to deliver on the promise now, right?
Yeah.
1 second. I usually have my resident DJ, but it seems it's disappeared today. Gideon.
Hey, have you heard the news? The UK's best.
Oh dear. I'm not a good DJ. Okay. I thought we'd go South Africa in recognition of you, Alford.
You're going to make me miss home, you know, so.
And everyone, when you finish your form, please drop us a note, and obviously feel free to leave. Just drop us a note so we can say bye, and wish you a great rest of the day. Everyone else who needs to finish your form, feel free to jump off. Thank you all so much for joining us.
All right, Eunice, Steph, Constantinos, and everyone else, I'm gonna make a coffee and go to the gym and get the day started. So
enjoy the rest of your day. Thank
you,
Amone. Have a good day.
It was a pleasure. Thank you.
Thank you very much, all. Have a good day in Europe.
You too. Take care.
Bye-bye.